Thank you, everybody, for joining us. We designed this course because a lot of people are confused about certain areas of the claims process. We're going to try and address everything. If we don't get to it, please ask questions. The issues of processing an insurance claim and what the board and the manager need to know. When a claim occurs, there's a ton of moving parts, and Donnie's going to get into them a little later. But there really should be one point person assigned to handle the claim. And I don't mean the claims adjuster, I mean on the insured side. Generally, it's the property manager. Sometimes it's a board member. As the representative, you're going to be in the middle of the process, and the quicker you react, the quicker the claim will be adjusted. Can't tell you how many times we get someone who they file a claim and they're not the person who needs to be contacted. And so what happens then is, okay, it backs up the process. So over the next couple of slides, we're going to get into how to report the claim, what should be reported, and a little bit more. Donnie, if you can take this, just kind of go into the process of what you need when a claim is being reported.
Yeah, so one of the biggest issues in claims reporting is not presenting a complete record of the events that took place. All claims being reported should be done so in writing, via email, our mobile app, our portal, so that there's written proof that it's submitted. Oftentimes, it's not a great idea to call up and say, I have a claim. We like to have a formal written record that you would like to make a claim.
Donnie, I'm going to jump in here if I can. The reason more than that the phone call is probably not the way to go is usually I've had people who are calling up in the midst of a claim, right after a claim. They're in a panic. I can't tell you how many times I've received a phone call. Ed, we got a fire or there's water all over the place. Please put in a claim. They hang up. I don't know what building it is. I don't know what unit it is at that point. And what it now it means is now we have to circle back with them, and they're busy at that point. So it could be another day that backs it up. So as Donnie had said, written correspondence is always best.
Absolutely. And some basic information that we're going to need reporting a claim. I know some of them sound like, oh, of course you need that, but the association name first. Let us know what the building that you're calling about if you're a property manager. The location address, not super important, but if you can include it, do it. We should have it on file. What happened? A description of the incident. It not just water damage. Either the roof is leaking or you had a water heater blow or a pipe break in the wall. Try and be as specific as you can. Going along with that, what units or areas are affected? Is it your basement, your lobby? Is it Unit 5B, Unit 5C? Is it the whole building? Try and let us know as much as possible what units are affected, so that when an adjuster does come to see, they see all the damaged areas and they're able to take in the loss entirely. So that's very important, the areas that are affected. As Ed was previously discussing, the contact name for the person who is going to be your point person handling the claim, their name, their phone number, their email, best times to reach them, any information, and more information is better information. If you have any contracts, agreements, statements, incident reports, a lot of property managers will fill out an incident report for anything that happens in the building, whether somebody falls, whether there's a smoke situation, and we can definitely send you blank incident reports to use if you guys need it. Any agreements with any contractors, say, if there was a claim involving an elevator, let us know who services the elevator. That information is important. Any other information that you have that you feel is relevant, more information, like I said, is good. Pictures, if possible, of the damages when you send along the email to start a claim or on the portal to start a claim.
And Donnie, I want to harp on two areas here.
Sure.
The contact name, the phone number, and the email, they really, you need to specify how you want to be contacted, because we'll have clients who we only have their office number and we'll provide the office number, but they don't check their office number. They say, well, I only answer my cell phone, or vice versa. They say, well, I only take calls on my cell phone. We need to know that, because what the information that we have on file is what we're providing to the insurance company, to the adjuster. So if you want to be contacted on your cell phone, and that's the quickest way to do it, then we need to know that. And the same thing with the email. So I know we keep harping on this point in the first couple of slides here, but this is what is the first step in the claims process. And if it backs it up for a day or 2 or 3 days, well, that's 3 days later, not the claim is the longer that it's taking. Also, the units affected. And the reason that is important, and correct me if I'm wrong here, well, if we have only one C that's affected, that's one thing. If we know we have 8C, 7C, 6C, and all the way down is 8, 10, 12 units affected, that may be one that they want to get out there quicker. And two, they may have signed a different adjuster or possibly multiple adjusters, depending on the size of the claim. So we need to know as much information as you know at that point.
Correct. Well said.
Thank you. Property claims. It's important to provide some additional information. I'm going to need the governing documents, and the governing documents are going to dictate the responsibility of the parties, whether it be the association itself or the owner. And so the adjuster is going to need that because it isn't always the same. You may have the same building with two different units, but the responsibility of the association may be different in each of those units because improvements may have been made. In condominiums can be written any number of 3 different ways, really. You have bare walls, which says the association is responsible for basically the 4 walls and the ceiling, and the owner is responsible for everything they can see, feel, and touch, including parapet walls. On the flip side, you have all in, which means the association is responsible for everything inside the unit, including improvements. And then you have in between, which is single entity or build as spec, which basically says the owner is responsible for improvements and betterments, and the association putting the unit back to its original at the time of conveyance. So without those governing documents, the insurance company is not going to be able to adjust it because they don't know what the responsibility is. In addition, more and more buildings are starting to add amendments or resolutions pertaining to damage or the deductible. So deductible resolution is becoming more popular. And what that basically says is the owner is typically responsible for the association's deductible if their unit is affected. And if 2 units are affected, they split the deductible and so on. Well, the insurance company needs to know this because it's going to be adjusted differently based on what these resolutions say. And any of these any of these amendments or resolutions that aren't supplied, again, it's just going to delay the process. So a lot of what we're talking about in the early on here is how to keep the claim process running smoothly, because people get frustrated when the process takes longer than it should be.
Affected unit owners. All affected unit owners should alert their own personal insurance carriers and should be filing a claim if damage takes place within your unit. Some owners may be responsible for more than other units, depending on the governing documents. So what this means is basically that a lot of times the association is really only responsible for original elements when the unit was built. So somebody who has a renovated unit and somebody has, an original unit may have the same amount of damage, but somebody gets paid a lot more from the building's insurer, and that's because they are only responsible for certain items. You can't assume that everyone is responsible for the same items in their units because of these improvements. So it's best to have the carrier sign an adjuster to review what was damaged and what their responsibility is. So the 2 insurance companies, the unit owner, the building's insurance, kind of need to come together and work out, we're going to pay for the floors, we're going to pay for the walls, we're going to pay for the carpeting because it's an improvement. So it's best to always file a claim if there's damage that happened within the unit as well. In addition, associations have resolutions to the bylaws indicating that in some situations, owners bear the responsibility of the association's deductible. So it's best to have them involved from the get-go. I have one right now where it was not presented in the governing documents that there was a resolution that was passed in 2017 that now the unit owners are responsible to pay the building's deductible if they have a claim within their unit.
Donnie, what do you say? So you suggested all cases where there is damage in an owner's unit that they should put their insurance carrier on notice, correct?
Correct.
All right. We get the question a lot of the time, so I'm going to ask the question because I'm sure we're going to get it, is, well, we don't want to put this claim in, or should we put it in, but the homeowner's carrier will not adjust it until they get a declination from the insurance carrier. So what would your suggestion be on that?
So if there is significant damage, the path of least resistance is to file a claim and have it. If you have a high deductible and you do have a deductible resolution, that puts the onus back on the unit owner to pay for that, you can push back a little bit on the unit owner's adjuster. A lot of times they'll have to go to management and say that, per the governing documents and the damages that your adjuster, came out and assessed, the damages won't meet our deductible. So there really is no reason for us to file a claim. And some carriers may allow that and say, okay, we'll pay out our unit owner. We're responsible for all the damages anyway. Some carriers will push back and really harp to get some kind of written confirmation from the buildings carrier that the claim is denied, or it's covered, or it's under the deductible. A lot of times, unit owner carriers will try and express that, oh, we just need a denial from the building's insurance carrier and we'll pay you. That is a ruse for the most part. And I think Ed will agree. They're not doing it to get a denial letter. They're doing it because they want the building to cover a portion of the claim.
Right. And I just want to get into something here. Is you're right about that. A lot of the times they want it submitted to the insurance company for the association, because once the claim is paid, many times the insurance company for the association can't subrogate back against the owners. So most governing documents, most of the bylaws have waiver of subrogation in them that say, well, if the damaged party has property insurance and their carrier pays for it, they can't subrogate against the other party. So once it's reported to the association's carrier and they adjust it, it's difficult for them to subrogate it. So this goes back to one of the things Donnie had mentioned before about having the resolutions and amendments in hand. So that way, when the claim is reported, the insurance company is aware about that. That information can also be sent over to the homeowner's carrier and say, hey, listen, we have this resolution here that it is your responsibility. So the goal is to make the negligent party or the party that is responsible and their insurance company pay for the damages. Reporting procedures and employees. We have situations where employees of the association, whether it be a super reporter, and in some cases I've seen board members speak to a claimant's attorney or a claimant or an investigator. So these are just basic rules to follow here. Do not give a statement to the claimant or their attorney or any investigator in writing. If you're going to speak to someone, please speak to your insurance broker first and clarify whether you can, okay? The statements could contradict the information, be inconsistent. And so we've had situations where people will say one thing at one time and then they'll say something else later. It makes the case much more difficult to prove. Do not provide a copy of the incident report to anyone else. Do not discuss any prior or similar incidents. So we've had situations where somebody slipped and fell outside in the parking lot and the super said, yeah, we've had that problem before. A couple of people slipped down. Okay, once you do that, you've basically admitted guilt. And so that goes to the next point, don't admit liability. Everything you do can prejudice the insurance company's case. And don't give a statement showing that the insured had a prior notice of a defect and never addressed it. And kind of goes back to what I was saying about that super. They had an issue with the parking lot. They knew it had to be fixed. They hadn't done it at that point. And he basically admitted that they have issues there. So, Donnie, I don't know if you want to expand on any of these, but I've run into these several times.
Yes, and I would add one more thing about not admitting liability, and it may sound cold, but don't apologize, because that could be seen as an admission of guilt and then an admission of responsibility. It may be, you may feel very bad for them, but if you can avoid it, please do.
There are other ways to show sympathy than saying, right. I am sorry. So
right.
You're right about that. Time frame. I'm going to let you handle this, but time frame. Actually, I'm going to go into the way the policy reads, and I'll let you go into the time frame since you handle the claims from start to finish. Let's talk about what the insurance policies do and don't say. Insurance policies don't say a specific time you need to report a claim. So I'll always get the question, well, how much time do I have to report it? Insurance policy doesn't say 5 days, 30 days, a year. The property section reads, give us prompt notice of the loss or damage, include a description of the property involved. As soon as possible, give us a description of how, when, and where the loss occurred. So nothing in there is saying you have a day, 24 hours, 7 days. And so not saying that you shouldn't report the claim on a timely basis, But there are times where you may want to take into consideration, say, I don't know if I necessarily want to report a claim. Look, give an example. You talking about something under a deductible. Well, if you have a $25,000 deductible and you know it's $10,000 worth of damage, you may not want to put that claim in. Likewise, even if it is slightly higher, you may have a $10,000 deductible to $12,000 claim. The association may not want to put that claim in because it affects their loss history. So in theory, you have time to go and get an estimate and think about what if you want to submit that claim or not. And we'll go a little further into this shortly. General liability, how does the policy read? You must see to it that we are notified as soon as practical of an occurrence or an offense which may result in a claim. Again, there's no specific time frame in there. They're just saying as soon as practical. And that certainly could be a few days. I mean, there are times where you may not be aware of it. Someone may have tripped and fell outside. You saw it, we don't know who it is. And then 3 days later, they come back and say, hey, I slipped outside. Okay, well, just because you didn't report something 3 days ago doesn't mean that that it's too late at that point. So keep in mind, you always do want to report it as soon as possible, but there's no specific time frame in the insurance policies.
Yeah, with a general liability claim, it's important once you have written notice, please let us know as soon as possible so that a claim be made and be put in. Now that claim may never get pursued and it may go away. With property claims, it's a little more, you do have some time to decide whether you want to file a claim or not. I think a good time frame would say from a week or two from the date of the loss. That being said, you have to make sure that you do what you can to address what is causing the damage and make sure that you properly mitigate the damage. So you can have a company like a ServPro, like in case of water damage, you can have a company like a ServPro come in, give you an estimate, do what needs to be done to make the damages, keep them from getting worse, have a plumber come in, stop the leak, evaluate what the cost is, and then decide whether you want to put a claim in. And I think that 2 weeks is a fair and reasonable time to get that figured out. And if you want to file a claim, because if you put in a claim for quote unquote notice only for property, every carrier handles that situation differently. Some will not put it on your loss runs. Some will want to investigate, some won't. And if you have a carrier that's going to put it on your loss runs and are going to investigate, it's going to be a mark against you. It may not be a big mark against you, but it's still a mark against you. And in this current insurance market, you're going to want to have as few marks as possible. So I kind of got a little jumbled there on the slides. So where are we? Are we on?
I would say give the tips. We're going to go into the notice only a little bit later, but I would say give them whatever tips to help protect their interest after a claim occurs.
Yeah, take photographs. If you're unsure if you were going to file a claim or not, take photographs of the damage. Save any damaged pipes, anything that was damaged that you would like to claim. That way that if you do end up filing a claim down the line, you have it documented of what occurred. Don't make any final repairs though until you have an adjuster come out and look at it. So if a ServPro comes out, they may cut 2 feet of the wall up if a wall gets wet. Don't put the drywall back until the adjuster comes and looks at it and has time to make their report.
Very good. In some instances, if a contractor has caused the damage, hopefully you have insurance information on them, including insurance certificate. You want to supply that, okay? Because if it was caused by a faulty vendor or negligent vendor, probably going to want to either have put their insurance on notice or provide it to the insurance company so they can subrogate at a later date against them. So if you have that information, please send it. Same thing we talk about the homeowners, they should automatically report this to their insurance carrier, okay? So you want to provide the name and information about them, but you also want them to make sure that they put the carrier on notice. We talked about before, any kind of paperwork and co-ops is typically alterations agreements, etc. Those should be provided as well. And as Don, as you had said, you can make certain repairs. You have to do what you can to keep additional damage from happening. So you're allowed to make emergency repairs, but take those pictures, okay? You can't expect what you can't. We've had situations where people make the entire repair, they throw out the pipes and whatever else, and then they want to submit a claim at that point. The insurance company has nothing to go by. There's no photos. And even if there are some photos, there's not a whole lot. So they don't see what caused the damage. They can't evaluate how much damage there was. So please make what repairs you need as to keep from further damage from happening, but don't make all the repairs. Your liability claims. General liability and D&O claims there's no exception there in terms of timely reporting. You still need to do so. All bodily injury or property damage claims must report it to the carrier as soon as notice is provided, even if for informational purposes. And so let's give some examples here. Again, we'll use that slip and fall outside. Someone slips and falls or inside. There's times where the lobby floor is wet, or they slip on steps. They get up and say, I'm fine. Don't worry about it. I'm fine. They may be fine now, but it's kind of like a car accident where you get out of it and you feel great. And then the next day you have whiplash. Sometimes the injuries take a little while, and it may not be a day or two, maybe a week later. It may be 6 months later. All of a sudden they're having back problems. Now they're going to a chiropractor. And then they remember, oh, you know what? It's been hurting since I slipped and fell. So in those instances, you have to put the carrier on notice. What you don't want to do is you don't want to prejudice their case. Okay. Now, understand the difference between general liability and D&O policies. General liability policies are written on an occurrence basis. What that means is the carrier who is on the risk at the time of the occurrence is responsible for defending a lawsuit. So let's give an example. We have a carrier who from January 1st to December 31st, someone slips in June, coverage is transferred to December 31st to another carrier, and a couple of months later, a lawsuit comes in for that slip and fall that happened in June. Well, the carrier who, even though they're not on the risk anymore, they were the carrier when it occurred, so they're responsible for defending that claim because it's an occurrence-based policy. Then you have D&O policies, which are claims-made policy. And what that means is the carrier who is on the risk at the time the claim is made is responsible defending the suit. And that's why it's important to take seriously any even seemingly minor threat of complaint, particularly if it's in writing. So let's use some examples on that. So in that same scenario, we have a policy that runs from January 1st to December 31st. We switch coverage on January 1st of the next year, and a claim comes in for a decision that the board made last year. Well, the new company is the one that's responsible for defending it because they're responsible because the claim is being made during the period of time that they have it. Now, there's some exceptions to it. If you knew something was brewing and you didn't report it and you didn't let them know, they're going to decline that. And that's the reason why anything seemingly minor, any threat of complaint needs to be reported. And Donnie, I'm going to give you a scenario here, and you tell me. I get this question all the time. Board is discussing something and someone doesn't like it. They storm out of a meeting and say, I'm going to go see my attorney. Does something like that need to be put in, as opposed to when we say particularly in writing? A lot of times, given a scenario of which you don't necessarily need to maybe report a claim, and a scenario in which case they probably should, despite the fact that it sounds like it's something minor.
Yeah, a lot of times, especially with D&O claims, because it is a claims-made policy, it is best to just report it. It will not be considered a claim until there is a threat, until there is a lawsuit. But it's kind of just like putting them on notice. So I like to err on the side of caution that if anybody threatens you with a lawsuit, over decisions that the board is making, I would probably report it. If it's in writing, there's no question.
Absolutely.
I've seen instances where a D&O claim was reported because somebody had made a threat over email. Some investigation went on. It turns out that there was an email from about 6 months earlier that they discovered, and it wasn't reported, and the claim ended up getting denied because they weren't given prompt notice when the issue first arose. So I would err on the side of caution. Where do you fall, Ed, when somebody makes a threat in verbally?
Verbally, it's kind of tough. So give an example. Somebody's walk. Oh, you don't. They're talking. I'm talking to you, Donnie. So you know what? I think I'm going to sue everybody in this bill. You know, the entire board. And it gets back to the board. I'm not sure I necessarily put that on. That's somebody blowing off steam to somebody else. They walk out of the meeting and say, "Well, you'll be hearing from my attorney." Yeah, I don't know if I necessarily. Everybody gets angry. Everybody says things like you said. If something is in writing, absolutely, no matter how minor it seems like, there's a paper trail at this point. I would probably put that in, but a lot of people grumble. So I am not sure that in every single instance where the word attorney is mentioned that it needs to be put in. Uh, but that's something that they should probably discuss with their insurance broker because, like you said, well, that maybe not be anything, but 5 months ago they may have sent a trail of emails to each board member insinuating wrongdoing and that they'll be seeking legal counsel. So I think it depends on the situation in terms of that. And just preserve everything that is possible associated with the claim: names, photos, emails. In this day and age, even when you delete an email, it's there. People can pull it up. So just because you deleted an email doesn't mean that it doesn't exist. And if you know that's something going on, these are things you should save, be aware of. Liability, video footage, logs, any kind of contracts we've talking about. Contact information for any witness. Well, Donnie was standing there when somebody slipped and fell and that person got upset. I'm fine. Well, they turn around and they sue later. Well, we want to make sure that we were aware that Donnie was there, and then Donnie could be a contact. So more information, the better. Handling. I'll leave that to you, Donnie.
All right. So another issue is the spoliation of evidence, which is the intentional, reckless, or negligent withholding, hiding, altering, fabricating, destroying evidence for anything. So if you dispose of a broken pipe, before the adjuster takes a look at it, that may hurt your claim. And in some cases it can result in a denial. So save all the parts so the adjuster can take a look when they come to inspect. If you do need to dispose of anything that was damaged, which is occasionally the case, make sure you have photos and you have a report written up by the contractor or vendor who's handling it. So if they had to haul out a water tank, it couldn't stay there. Just make sure that you get the bill from them that says that they hauled it away and it was their decision to do so.
And that bill should indicate exactly, what the issue is. Well, we had water tank burst, etc. A lot of the times that information will be on there. So again, save it, take pictures, and supply it to us and to the insurance company.
All right. And with respect to a general liability claim, it's key to preserve all evidence of a claim. And with respect to property losses, preservation of evidence, chain of custody documentation, and storage of loss-related materials is critical to ensure the evidence in subrogation efforts. So your water heater may go and you've only had it for 2 years and it caused a whole bunch of damage. Well, your insurance carrier may want to go after the manufacturer of the water heater and see if there was some kind of defect with it, and possibly get your money back and your deductible back.
Donnie, give us a one sentence. You started to hit on it there. Give us one sentence that describes the definition of subrogation.
Subrogation is when, after your insurance carrier makes a payment to you, they try and go after the responsible party, either legally or sometimes it doesn't get there. They'll just make a claim against their insurance company for the return of the money that they paid out, as well as your deductible.
Thank you. Speaking of deductibles, for property losses, it's important to keep in mind the deductible considering filing a claim. It's kind of said before, if we have a $10,000 deductible and $11,000 worth of damage, $12,000 worth of damage, it may not make sense to file that claim because, as Donnie, as you said before, that's a knock against you. And when we remarket the insurance or the current carrier reviews their loss history, we have to take that loss history and supply it to the other carriers as well. So there you have the new carriers and the current carriers who are reviewing the losses. And most of the time, one large claim is going to be probably a lot better than a bunch of smaller ones. And in the market we're in, any claim really could be detrimental. So you want to keep in mind what you're submitting. So for example, a door repair is $1,500, deductible is $2,500. There's no point in filing a claim. Always take into consideration the deductible in relation to the cost of the repairs. So as I'm saying here, it may sound like a great idea to get $1,500 back on a $6,500 claim and a $5,000 deductible. That $1,500 may cost you $10,000 in the long run because the insurance company raises your premium.
Right.
In relation,
They will do what they can to get it back.
Absolutely. Absolutely. There's a reason most insurance companies are still in business is because they, in the long run, they do make money. In relation to water damage claims, as a general rule of thumb, we do recommend a lot of the times putting in water damage claims. Now, there's distinctions between New York and New Jersey. In New York, mold is covered as long as it results from a covered cause of loss. In New Jersey, there's usually coverage on the property side for remediation. It's sublimited, and it's usually excluded on the liability side. But the reason, especially in New York, a lot of times we do recommend submitting water damage claims is because the mold, if eventually mold results in that claim and you didn't put in the original claim, then the remediation aspect of the mold isn't going to be covered. Okay, so again, it's a situation, I get the question all the time, and you do too, Donnie. Well, should we report every single claim? But you're telling us not to because it's a knock against us. So at some point, you really need to be having conversations with your broker. If it's a significant claim, you got to put it in. Okay. If it's a smaller one that's been ongoing and there's already mold there, probably want to put that in. If mold is cleaned up, or if a claim is remediated pretty quickly and it's done correctly, good chance mold doesn't result. Okay.
Yeah, mold takes time. So and also, try and use your best judgment. We'll try and help you out, the best you can. If there is a water leak and it is caught pretty quickly, and a pipe had to be repaired because there was a leaking drain line in the ceiling, and all you have is a hole in your ceiling, well, and you have a $10,000 deductible, even if there was mold, in that little small space, it's probably not going to reach the deductible. So try and use your best judgment. If I would say that if more than 3 units are affected, report a claim for water damage no matter what, because not everybody is going to, also be very, not everybody's going to be cooperative. Some people may, say, oh, there's mold and something wasn't done right, and this is everybody's fault but mine. So then I would report it. But if it's just a hole in the ceiling and the pipe gets repaired fairly quickly, that may be one water damage case where we may not want to report a claim if you have a high deductible, and we're talking $10,000, $25,000.
Thank you, Don. All right, this is you. How long does it take? And I'm going to put the disclaimer that there's no exact science to this, but give them a general idea what they can expect on.
Sure. So the timeline of a property claim can vary significantly from situation to situation. Most is how big is the loss? If it's pretty modest, it can be resolved in a month or so. And I would say that's probably claims in the $10,000 to $35,000 range. Then claims for going from there up to $100,000 could take about 2 to 3 months. Fire where several units, they can go on for years. Water damage claims where entire lines are taken out can sometimes take 6 months between a year. And some of that is, carriers not doing everything they need to. Some of that is insurance not being exactly cooperative. And a lot of times that it's just a lot of work and a lot of moving parts, a lot of adjusters. Every unit owner has their own adjuster. Every unit owner has, different betterments and improvements. So things like that can slow a claim down. So the more units involved, the longer the claim was going to take. So from the time when a claim is reported, you should hear from the adjuster within 3 business days, unless it's an emergency. So if it's a big fire, they'll try and have somebody out there either the same day or the next day. If an inspection is to take place, which usually does, it's your responsibility to organize and provide access for the adjuster and the affected unit owners. So the sooner the inspection takes place, they get in to see all the units, the faster the claim will move forward. After the inspection takes place, the adjuster will submit their report to the insurance company. A lot of them have about 30 days to submit their first report. And there could be, if a claim is large enough, there could be several reports because the work, you just keep finding more things that were damaged, more work to do. So it can take anywhere from a week to 2 weeks to produce. Some are longer, but that's a good indication. So if it's a modest claim, about a month, larger claims, a little bit longer.
Okay. So you
All right.
kind of talked about, so larger claims may be severe in nature, but they also may be involving multiple units. So you can't take everything and say, okay, well, it's going to be 1 month. As Donnie had said, sometimes when there's 4 different adjusters involved, it may take a little while. We do recommend getting an estimate of your own. The insurance company doesn't do the work. They give you the money to do the work, assuming it's a covered claim. It's still your responsibility to make sure all the repairs have been done. So one, it doesn't hurt you to go out and get estimates and know what you're looking at. But two, the insurance company isn't always right. Okay. Just because they give you an estimate doesn't mean that you can get a contractor to do that work. So what you want to do is you want to get your own estimate, at least one, if not two. And that way you have your own documentation. If you have 2 contractors who are providing you estimates of $50,000, but the insurance company's offered you 25,000, well, then we need to go back and fight with them on that. And you having that estimate provides us with the firepower. But you also want to have that estimate anyway, because again, the repairs have to be done. The quicker you get someone in there, the quicker the estimate is provided. Well, the quicker the repairs are going to get done.
And then you could also have your contractor negotiate with the insurance carrier and say, well, this is what I charge, and maybe they can meet in the middle somewhere, maybe they can't, but definitely get your own estimates.
Absolutely. At the end of the, Donnie, at what point in the process do we get a copy of the adjuster's estimate?
It's usually the last thing, right when they're about to offer payment. They'll, a company like GNY will say, this is your payment. And they'll attach their estimate, their statement of loss. If there's other things that aren't actually in the estimate, such as mitigation invoices, electrical invoices, other ancillary things that aren't really bid items in their estimating software, but they will usually send that when the claim is ready to settle.
Okay. And that's what you use to disperse the funds. So typically the estimate will break out, okay, well, there was damage to this unit, this is a common area. And that's how you basically understand how you're going to disperse the payments. In many instances, you or we can request an advance if there's significant damage. So if we know it's a covered claim and it's large enough, then we will request an advance on your behalf. And so there's nothing wrong with asking for that. So if you feel that needs to be done, you absolutely want to talk to your broker about getting an advance.
Yeah, or talk to the adjuster who's there after the inspection and say, this, as you can see, this is a lot of work. We would like to request an advance at this time. It's also a good time to ask so that you guys are both on the same page, because they're going to have to be the ones who facilitate the payment as well.
Very good. And upon settlement of the claim, they're going to send a proof of loss and a subrogation receipt if it's applicable. And you need to sign off on that. So, Donnie, do they submit the payment without the signed proof of loss?
Some carriers will, if the claim is small enough. Also, some carriers will, if the claim is small. Some will do it anyway. Carriers like GNY, they don't even sign. They don't even require proofs of loss. They just issue you the payment. But most, that's an exception to the rule. Most carriers will not release the payment until you have a signed, notarized copy of the proof of loss that is emailed to them. You hold on to the original in case you ever need it, but usually they don't want a physical copy mailed to them. That's just how I usually see it.
Thank you. Holdback. One of my favorites. A holdback is also known as recoverable depreciation. Most claims will have what's called a holdback applied to it. And the reason being is if a property policy is written on replacement cost, what you must do to comply in the event of damage is actually repair or replace the item. Okay. So there's 2 ways an insurance policy can be written for the most part. You have a replacement cost, you have actual cash value. And the actual cash value is the actual value of that item at the time of the claim, which is minus depreciation. So let's use a TV, nice and easy. You bought a TV for $1,000. It's 4 years later. It's 4 years old. That TV may be worth $500. You're going to get actual cash value of $500, whereas you want replacement cost, the cost to replace it at this point of, let's say, $1,000. So the holdback is kind of what the difference between replacement cost and actual cash value. So what they're saying is, okay, we're going to hold back this money. Once you do the repairs or the replacement, and you send us receipts showing that the repairs were made, they will release the holdback. Now, the caveat is it has to have equaled at least what they anticipated the claim would be. So let's use an example. They have a claim that they feel is $100,000. They've issued $85,000 out. They've kept a $15,000 holdback back, and you've done all your repairs and you've got it all done for $80,000. Well, you can't come back and say, well, we want you to release that $15,000. You've only spent $80,000 of the $100,000. So in order for them to release the holdback, you have to show and prove that, one, you did the repairs, and two, that the cost of the repairs equaled what the estimate was going to be, which was $100,000 in this case. A lot of times people can get the work done for less than the actual estimate. You don't get the rest of it. It's not like a year-end bonus where you get to keep the rest of it. They're not going to release that.
Yeah, and carriers do this so that they make sure that you do the repairs. This is a way of them ensuring that you do the repairs. You don't just take the money and run. So if you have a $10,000 loss, they pay you $8,000. You come back and you show canceled checks, paid invoices for $10,000. They'll release the other $2,000. And say you have it for $9,000, they'll release $1,000. But if you get it done for less, you're not entitled to that depreciation, as Ed was saying.
And that's something that we definitely should add to this slide here. The reason the insurance company wants you, and you need to show proof that the repairs were made. So let's take an example where we have water damage in a unit and does damage to the floor, and it's the association's responsibility. Well, if we have another claim 2 months later that affects the same area, if you haven't been able to show that you made the repairs to that unit from the first claim, they're not going to pay you a second time. So they want to make sure that the work has been done and the repairs have made if you expect to get paid on the second claim. So again, you need to make sure that you're actually doing the work in order to get paid. And then we've had instances where that happens. So there are times where multiple units are affected and the money is dispersed to the owners, and the owners are making their own repairs, but they don't show proof that the unit was repaired. And now there's another claim in that unit. Well, it's difficult for the insurance company to determine what was the first claim and what was the second claim. So you want to make the repairs, and that leads to the last part, is save the documentation. Okay. If there are any future claims in the same areas previously damaged, you must prove that the repairs were made before the insurance company pays for the new damage.
Yeah, when we had Tropical Storm Henri, and then we had Ida a few days later. I believe it was 8/22 and 9/1. There was a lot of people putting in 2 claims, and they had not even fixed damage the first time. Now they do still have to clean up, but you're not entitled. So some of the second claims were for mitigation only, and there was no repair cost because they didn't make the repairs the first time.
Very good. All right, and notice only, this slide is why I decided to design this class. And so it's, I'll say we're saving the best for last here. Remember this one sentence, you get everything else. There's no such thing as putting your broker on notice and not the insurance company. It doesn't exist. Please don't ask us. It happens all the time. I'll get a call and they'll say, Ed, I just want to put you on notice. We had a fire in unit 1C, but don't tell the insurance company. But you have to, either of 2 things happen. So if you tell us and we don't tell the insurance company, and at a later date, you want to file a claim, here's what's going to happen. If it's a company that we have a direct contract and appointment with, they're going to pay the claim, even though it's late. And then they're going to come back and they're going to sue us, okay? Because they can do it as a part of the contract. So we lose in the long run on that one. Secondly, there are companies where, so there aren't specific contracts. They are probably going to deny the claim for late reporting, and you're going to sue us because the insurance company is not paying a claim. We lose in that instance either. So it's a lose-lose situation for us. So when we're told about a claim, we could do either of 2 things. We could put it in, Or what we do a lot of the times, and Donnie, correct me if I'm wrong, is we'll follow up with you in a week or two or whatever it is and say, hey, just checking back with you to see if we want to put that claim in. If you tell us no, we're going to send you something back in writing and says we are not reporting a claim. You have decided you don't want to report a claim, because we are going to document it on our side. Because again, at the end of the day, for the most part, you telling us is pretty much the same thing as you telling the insurance company, and we either need to do something about it. So we will follow back up with you at a later date, and if you can choose to put in a claim at that point, we'll do it. If you choose not to, we're going to send you something in writing. We're going to close it out.
Right. I follow up with some people for months because I want them to acknowledge that, okay, right now a claim has not been filed, but if you want to file a claim, let us know. If you don't, let us know. And maybe to a fault, I follow up too much, for months. And then eventually I will close it down and I will send an email that says, we have not heard back from you. A claim has not been reported. If you want to report a claim, let us know as soon as possible, because claims can be denied for late reporting. So I will follow up with you until you respond yes or no. I want to file a claim.
Now, there is such a thing as info only to the insurance company, as Donnie mentioned before. I'm going to let you handle this, Donnie, in terms of do all insurance companies take info only?
No, they do not. Well, at least for property claims. For general liability claims, yes, you can do it, which is basically somebody fell, they got up, they walked away. I don't know if they're going to make a claim ever. That's an info only claim. Now, I had, water damage because a pipe burst and my floors are wet. I don't know if it's going to be the deductible. Put in a claim for information only. Some carriers will say, okay, we won't really investigate. Some will treat it just like a regular claim. They'll want to send somebody out there, which is incurring costs, number one, and it's going to go on your loss runs. So that's for all. If it's on your loss runs and they're spending money on it, call it whatever you want. That's a claim.
Right.
Agreed, Ed? That's a claim. And,
Absolutely.
And if they're out there spending money, adjusting, sending an adjuster out to survey the damage and write a report, somebody has to pay them, and the insurance company is going to pay them, but they're going to attribute that money to you against you and your loss runs. So every carrier is different. Again, what we spoke about earlier, don't take too much time, but take your time. Don't be in a panic. Survey what happened and say, does it make financial sense to file a claim for this incident?
Agreed. And that's where we go back to maybe getting an estimate relatively quickly. I mean, if you can get someone in there to provide an estimate in 4 or 5 days, well, one, that gives you to determine the time to decide whether you want to put the claim in, and two, decide whether it's financially makes sense to put the claim in. So it's a good point. In summary, it is important to remember that you may be able to put your insurance company on notice, but not your broker. Okay. So that is the highlight of the presentation right there. This is one of my school classes. We teach several of them. We've done one before. We're going to continue adding more on until everyone graduates. So thank you for your time. Here is Don and my contact information. We're going to access, I do see a question here, Donnie. Let's see. Let's make sure we get that one. It says, if only covered to original, is amount paid to get back to original if improvements were made, or if nothing, if improvements made?
That's a great question. That is a great question. And it's not an easy answer because it differs between every carrier. And it also differs if you are a condo or a co-op.
Correct.
So in a condo, if you say you have improved cabinets and they are damaged, the insurance company will likely not pay back to a builder grade cabinet. In a co-op, they are likely to do that. So if you have upgraded cabinets, they will pay you for a stock cabinet. You go to your insurance carrier for the difference in the money.
Okay, and they clarified and said it is a condo. And so, yes, I've seen the scenarios. I've seen it handled both ways by condos. I've seen some of them give a line item for back to original specs, and I've seen some of them take a hard stance and say, you are responsible clearly by from the bylaws that say you're responsible for improvements, we're not paying anything. I've seen units that are basically bare, no cabinets. I've seen them where they haven't even fixed the floor. Okay, we have the concrete floor. They did whatever the overfloor is, but they didn't put the new floor back on top because that was an improvement. So in condos, like Donnie had said, it can be handled for you should go under the assumption that you're responsible for it and make sure you're insuring it, because insurance companies can certainly handle it differently. But in co-ops, you can probably get back to the original like, kind, and quality. But in condos, assume you're responsible for anything you have touched and improved.
And I'll also just say that a lot of times it's probably negotiable depending on who the adjuster is, and who they're reporting to. Because I don't think that in the policy, it's going to say we'll pay, we'll pay you the standard grade, or if it's upgrade, we won't pay you anything. So I think it is a little ambiguous. That's why it differs from carrier to carrier. Some carriers will pay it, some won't. I think that for the most part, you will be able to negotiate on that. And
why chance it though? And I don't mean to interrupt you, but why chance it? Why take that chance? If you buy a unit and you've made improvements, or you've bought a unit that someone else had made improvements on previously, you're responsible for them. So why take that chance? Because again, they only have to go back to like, kind, and quality. Well, if your unit is, let's say, 50 years old, I don't know how nice that kitchen's going to look with the like, kind, and quality from whatever they can match it with from what was at the time that the building was built. So why take that chance? Ensure what is your responsibility. The other question, does insurance pay 100% based on adjuster, or can we get other pricing?
Yeah, everything is negotiable. So you do not have to take what they say it is worth. Now, on the other hand, they are going to give you a very detailed estimate. They use a software called Xactimate. They go by feet, how much everything costs, your area that's damaged. So if you do come back with an estimate, try and get a company that does use Xactimate, or a company that will give you a very detailed estimate. If it's one page and it says repairs $10,000, the insurance company is not going to seriously consider that. They're going to want to see an estimate that is just as detailed as theirs. They can see the work that they missed. So it's not 100% based on what the adjuster says. You can absolutely get other pricing, and I would say that you should do your due diligence to do that.
All right, we have another 2 questions. Are there limitations on supplemental claim after settling a claim? Please go over submitting supplemental post claims.
Yeah, a lot of times the damage does not all get paid out, at one time. Sometimes there is that one unit that doesn't tell you that they had damage until they hear other people getting paid. So there is no limit to the amount of supplemental claims you can make. I mean, you may be making the adjuster angry by going back to them a bunch of times, but basically you are owed to be put back into a pre-loss condition. So whatever happened, you were entitled to get it back the way it was. And do you have anything to add on that, Ed?
Nope, I think you did perfect.
So no, there is no limit. You can make as many supplemental claims to get back to your original status as much as you can.
Keep in mind though, some of the things we've gone over. Well, if you've made all your repairs and there was no pictures and they didn't get a chance to adjust the unit, that could cause some issues.
Yes, it can.
All right, and there's one more question. Who approves the contract? Us, or unit owner, or insurance company? Whoever is hiring the contract, the insurance company does not approve the contract. Okay, so if there's damage to an owner's unit and they're responsible, they're hiring their contractor. If it's the common areas, the association should be hiring a contractor. The insurance company does not approve it. Now, that being said, your insurance broker may want to have a say in this. So one of the things that we do for our clients is we have a department that reviews contractors that you're hiring. And the reason being is they don't always have proper coverage. And that's detrimental, especially in New York, where the labor law claims, which are injury to contractors or employees, they're so unfriendly towards the property owner that they're held responsible for all injuries. So a lot of the times with our clients, we want to see copies of the insurance of contractors you're hiring. And so again, it's not up to the insurance guy to approve it. It's up to you, but you may want to have some dialogue with your broker. Next question is really not related to claims. We're going to go past that. It's asking about the liability rates. The market's just very difficult right now. So there are no real updates in terms of umbrellas and such. And that is really it. Yes, you do get a copy of the seminar. So that will be heading your way, if not today, then tomorrow. So thank you, everyone. You have a nice day, and we appreciate your time.
Thank you very much.